Any economy depends on its banks. In reality, every bank, including the Federal Reserve, generates money. What if I told you that each bank has the authority to issue new currency? There is an easier approach than theoretically starting a bank to start producing money. When you can start Bitcoin and become a crypto billionaire overnight, why waste money on creating a bank first? That is, at least, what has been taking place lately. If you believe that cryptocurrencies are a hoax, you probably don't know anything about banks. Therefore, in this video, we'll look at 5 financial truths that banks want you to ignore, since if everyone knew them, the banking system may collapse. Or to paraphrase, Henry Ford said, "If the people of the country understood our banking and monetary system, I believe there would be a revolution by tomorrow morning." Give this video a thumbs up and subscribe if you're ready to learn. Now let's get back to the video. Number 1. It's a swindle to keep your money in a bank. How much interest would you receive if you deposited your savings in a bank? I'll ask you that. It appears at first glance that at least a small percentage is necessary for it to make any sense, correct? But if you examine the data, it's far from that. Best banks like the Citibank provide a paltry 0.5%. Even though interest rates are currently at their lowest level, some institutions do offer rates more than 1%. Consider this: when inflation is 2.5%, your money grows by 0.5%. Your wealth's fundamental value is essentially declining yearly. Spending the money right now is significantly preferable to keeping it in a bank. Your money's purchasing power in a few years will be significantly lower than it is today. And when inflation is high, as it is right now, for instance, the prices of assets like homes and stocks soar tremendously, as we have seen in the past year or two. Number 2. A bank is not a place to make money. It is a place to park your money. It is legal for any bank to print money out of thin air. The only bank that is permitted to produce money is the Federal Reserve. So even if I were to tell you that banks actually create money, you probably wouldn't believe me. The Fed is the sole organization with legal access to that printing press and the source of the dollar. The banking system is set up such that each bank in the nation, or in fact the entire world, is permitted to produce money to a certain extent based on the amount of money that customers have placed in the bank. Let's assume that you deposit $1,000 at Bank A. What do you suppose the bank will do with the money? The bank loans your money to someone else who wants to purchase a vehicle or a house, for example, and collects interest that is frequently considerably more than the meager 0.5% it pays you. If they kept it, they would not even be able to pay you the wretched amount. The typical interest rate on credit cards is 20%. The difference between those two amounts and what the bank pays you is enormous. The important thing to remember is that the bank won't disclose to you to whom it will lend your money. If your money is still in the bank, where did the bank get the money to lend to someone else? The bank will always show you when you check your account that your money is still there and you can withdraw it whenever you choose. Fractional reserve banking is what that is. Only 10% of the deposits may be kept by banks. The remainder must be lent. The bank makes another $900 and lend them to someone else for every $1,000 you deposit, bringing the total to $1,900. $900 appeared out of nowhere, thanks to the bank. Since all that is on the computer is a series of numbers, it's not as challenging as you might imagine. Number 3. Bank loans and other investments can help you make money. Mark Zuckerberg obtained a 30-year mortgage in July of 2012 to pay for his $5.95 million Palo Alto residence, which is only 3 miles from Facebook's corporate offices. He was the 40th richest person in the world at the age of 28, with an estimated net worth of $15.6 billion. Why would you go on debt if you had billions of cash and the means to pay it off easily? He could pay cash for a dozen mansions valued at $6 million without batting an eye if he so desired. Why therefore obtain a mortgage? It's free money. That's the response. I recognize that sounds absurd. When you are already a billionaire, who would give you free money? I mean, unless it's for charity. Why would somebody give someone else free money? Interest rates are a prominent theme throughout. Recall how banks' returns are so low that this is not worthwhile to leave your money there because it doesn't even beat inflation, meaning you are losing money. In this case though, it's the opposite. Any money you borrow that is below the inflation rate is seen as free money because the inflation rate in the US is between 2.5 and 3%. The mortgage rate for Zuckerberg was barely 1.05%. The bank loses since the mortgage rate is less than the inflation rate, according to the calculations. To perform the math, you don't need to be brilliant. Let's imagine you take out a $1 million loan at a rate of 1.05% as an example. Prior to the pandemic, the average rate of return of a savings account was 2.4%. It is currently less than 1%, but let's stick with 2.4%. This means that even if you put the $1 million in a different bank, you will still earn $24,000 a year while just paying the bank that lent you the money a monthly interest payment of $105, which is 1.05%. Think about what would happen if you did that with $1 million or $1 billion. There is no benefit to keeping your money in reserve when you may spend it for more profitable endeavors. Of course, since the difference is so minor, this may not make sense when discussing smaller sums of money. However, when dealing with significant funds, betting about 1, 2, or 5% might potentially equate to hundreds of thousands of dollars. Number 4. The rate you receive decreases as your wealth increases. Keep in mind that banks are businesses like any other, and their goal is to maximize profit. They are not charitable organizations. They are responsible to their shareholders. They will not exist if their business model is not successful. Thus, they are far more at ease lending money to a rich person than a poor person. When you are a billionaire, for example, the bank can rest easy because no one is concerned that you would fail on your loan. If something were to happen, however, and you were unable to make your monthly payments, you could easily sell a portion of your firm to cover your mortgage. In actuality, this is how the banking system developed over the centuries. Banks only did business with the nobility, with individuals who had wealth or assets that continuously generated revenue, like land. Contrast that with a typical employee who may become sick, be unable to work, or just lose his job. Lending money to someone who is barely getting by is quite dangerous. Therefore, improving your financial situation is a prerequisite if you want to receive a better deal on a mortgage, credit card, or merely better conditions when borrowing money. Number 5. The nuclear arsenal of the bank is credit cards. 70% of Americans who have credit card debt acknowledge that they will not be able to pay it off this year. Consider for a second what that entails. The debt on your credit cards is not the same as the mortgage. It doesn't grow 3.5% annually. It's probably over 20%. And because most individuals choose to spend without considering how they will pay it back, that is how banks typically make their fortunes. They are prepared to maintain their current quality of living, even if they are unable to pay it. Banks phone you repeatedly to try to sell you a brand new credit card because of this. Without a doubt, using credit cards responsibly helps to raise your credit score. But if you are not financially responsible, you should avoid falling into this trap. If you enjoyed seeing this video, be sure to like and give it a thumbs up. Till then, thanks for watching.